This is Matthew Kratter from Trader University, and today I want to talk about altcoins dying everywhere. There are a lot of updates to be had in this area. Yesterday we talked about how FTX and Alameda Research may be close to collapse, and that situation continues to deteriorate. The market is now trading below that $22 level that Alameda Research offered to buy back the FTT tokens for. And so there was some temporary support at 22, and now that is completely broken down on large volumes. So it may be true that FTX truly is in trouble as their balance sheet continues to deteriorate, and one of their major holdings, which is this token, continues to go down. So if you still have any capital on FTX, I would encourage you to get it off there just to be safe. So that's the first update. These exchange tokens never do very well against Bitcoin over the long term, and we can see here FTT imploding. The next thing I wanted to cover was this same theme of the SEC coming for crypto. This was a video from September 12th of this year. And to be perfectly clear, I want to make it clear that I don't take any joy in seeing regular people getting burned by holding FTT or XRP or Cardano or any other crypto that's really just an unregistered security or even an outright scam. That's why I made videos about the Terra Luna and Celsius problems before they imploded, and that's also why I've covered Ethereum so extensively on this channel. I want people to understand what they own and the risks involved. Ethereum is absolutely, without question, an unregistered security, and Gary Gensler of the SEC definitely has it in his sights. So if you're not a sophisticated investor, I don't want you to get hurt by this madness. And that's why I also covered HEX, which I believe is a scam, and it looks like it's about to be taken down by the SEC as well. I covered it in this video here about a month ago, and now the news is broken that the SEC has been issuing subpoenas to online influencers who've been promoting HEX and the related projects, Richard Heart's related projects of Pulse Chain and Pulse X. And it's beginning to look quite bad, as Eric Wall points out in this tweet. And in addition to getting subpoenaed, all these HEX information channels are now filled with information about how to shred digital evidence, including Richard Heart saying this. So this is a really, really bad look, and a lot of people are going to get in trouble because of it. But this is what you get when you promote these sort of things on your YouTube channel. Here's a tweet from Richard Heart talking about why you should never talk to the police. And supposedly, according to this tweet, the official HEX News channel on Telegram is telling everyone how to destroy information related to this. So this is a very, very bad look. This is obviously a very centralized project. It's a fake project, and if you want to learn more about HEX, you can watch this video, which I'll link to below. The second SEC enforcement action that we want to talk about today was this final ruling by a judge in the LBRY token thing. So LBRY, LBRY, is the token that powers the Odyssey platform. And in full disclosure, I do mirror my videos there as well as on Rumble, just to have a backup in case something happens to this channel. And so I think it's a pretty cool service, but the problem is they should have run it on Bitcoin. Instead, they decided to issue their own token. And they're clearly a software company, a centralized software company, and that's why they were able to be sued successfully by the SEC. And now they have lost this case. And as their CEO points out, this does set a dangerous precedent for crypto. Of course, Bitcoin is not crypto. Bitcoin's in its own category. But this is very, very bad news for XRP holders and the XRP lawsuit, as well as all these other lawsuits. And as I warned you, Gary Gensler is coming for your crypto. And it's really just a question of when. The judge ruled that no reasonable trier of fact could reject the SEC's contention that LBRY offered, I guess the token actually is called LBC. LBRY is the parent company, that LBRY offered LBC as a security, and LBRY does not have a triable defense, that it lacked fair notice. The question here is always, at least in U.S. securities law, is the Howey test. And the question that regulators ask is it an investment of money in a common enterprise with a reasonable expectation of profits to be derived from the efforts of others? This is a test you want to fail unless you want to be classified as a security. And if the answer to this Howey test question is yes, then you're a security and you should have registered with the SEC yesterday, or you're in big trouble. I was looking through the court documents from this LBRY case, there's a post that LBRY did where they talked about the long-term value prop of LBRY, but saying that it was dependent on our team staying focused on the task at hand, building this thing. So this is a clear violation, and this gets them tagged by the Howey test because it's a group of people working on this project. They issue these securities, these unregistered securities, to fund it. And it's clearly a centralized project with a team. And however laudable, this is just not something you can do in the US. There are fair disclosure laws. We can debate whether the SEC should exist or not. But I'm happy, as I've said many times, though I'm not a huge fan of the SEC, and they've done a very bad job of not approving a Bitcoin spot ETF. But the enemy of my enemy is my friend temporarily. And this is one thing that cryptos have to deal with. So when you're holding a token or cryptocurrency, you have to ask yourself, are you holding a true digital commodity, or are you holding an unregistered security issued by a software company that's pretending not to be a software company? Does your crypto, for example, do regular hard forks that are coordinated by devs? This is something that Monero is definitely guilty of, doing repeated forks to try to avoid the ASICs, as well as obviously Ethereum. I shared this when it came out that when Ethereum did the merge, this may have turned it into a security in the eyes of the SEC. And I think this is the prize that Gary Gensler really wants, which is to take down Ethereum. He's reiterated many times that there are very, very few cryptocurrencies that are actually digital commodities. And the only one he specified is Bitcoin. It's obviously the only significant one. You can argue that Litecoin, for example, might be a commodity. Even if it is, it's a very insignificant project. It doesn't have the liquidity or the brand that Bitcoin does. And here's a really important point. To become the next global reserve asset and currency, you need to be able to ward off nation-state level attacks. And that includes SEC lawsuits against your parent company that you're pretending is not a company. And when people say, let the free market decide what is money, let's get the SEC out of here, I sort of agree with that. But the fact is, we have to live in the world of reality. And we do have an SEC. And part of that free market deciding what is money is this collision between regulators and your cryptocurrency and seeing what's happening here. So this is an example of the free market. The SEC is involved in that. It is an actor. And you now have to remember that government regulators are part of the free market battle for this new money. Even if they're not able to take down Ethereum, Ethereum has clearly already become captured. I've been watching the OFAC compliance of their most recent blocks, and over the last day, 72% of Ethereum blocks are actively enforcing US government censorship. So this is already a captured coin. Maybe the SEC doesn't need to take it down. But I think we're going to continue to see this pattern of altcoins imploding and being sued by the SEC. And again, this doesn't bode well for the XRP Ripple lawsuit. I imagine Cardano could be next as well. So really understand what you own, understand the implications of it. And it's not just a question of what the SEC thinks of it. If in fact you have this non-neutral, unregistered security, that is not something that can become a global reserve asset because it's not neutral. It has a pre-mine, it has a team of issuers and devs, and it's basically a software company masquerading as a DAO or some decentralized thing, when in fact it actually fails. It actually passes the Howey test and is an unregistered security. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.